Hi, Santa Barbara and Montecito. My name is Daniel Zia. I'm the founder and CEO of Zia Group here at eXp Realty on the Central Coast, and I'm here to give you your monthly real estate market update for South Santa Barbara County. This is the June update that goes over all of the real estate statistics we have until the end of May. So let's first talk about what the Fed has done. The real estate market is affected by what interest rates are. That affects the buyer's buying power in a given market. The Fed recently decided not to increase the Fed rate in June, though they did hint that they're going to do potentially 2 more increases before the end of the year. So that's kind of an interesting factor. We don't know quite how that's going to affect our local economy and local real estate market, but it's something that we have been keeping our eyes on. Now, as far as what the market is doing in particular, we're still in the same market that I've been updating you the last number of months. We are seeing far fewer homes come on the market, which is giving buyers in today's market that are still wanting to purchase properties fewer selection, and with fewer selection, those home buyers are making fewer purchase decisions, and we're selling fewer properties. So while the statistics are a little bit above this or a little bit below this every month, I look at it as a giant pie. 1/3 of the pie is missing, means on average we've seen about 1/3 fewer listings come on the market this year, and we've had about 1/3 fewer sales happen as a result of that. So just keep in mind, that's what the market's doing. It's not that we don't have the buyers out there, it's just simply that the buyers that are out there can't find the right home for them to purchase. So if you are a home seller, the time is still a phenomenal time to sell, and that the supply and demand economics are still very much in your favor. Now, what real estate prices will do in the coming months, we're not sure. What we've seen retroactively year over year, this time of year, year to date versus last time, year to date, we've seen about a 7% softening in sales prices on the median sales price level and the average sales price level. Kind of interesting though, if you take out the luxury areas of Hope Ranch and Montecito, the average sales price has no change over last year. So that's kind of an interesting factor where there's all these different little niche kind of areas of the market or segments of the market. Some buyers are affected more by the higher interest rates. Other buyers aren't affected as much. We have a lot of cash in our area. Generally, we see about 4 of every 10 escrows actually close all cash, which is astronomically high compared to most other locations in the U.S. Now, as far as what segment of the market is most active right now, you're actually anything in the $1 to $2 million price range for single family homes is just flying off the shelf. Almost all of those properties are selling within the 1 to 3 week range. And the luxury market, even though it's a slower time to sell, relative to the luxury market in years past, is still quite active. We saw 11 sales above the $5 million price range. So there's still lots of activity in the higher price range and in the lower price range for single family homes. One of the areas that we actually saw a slower level of activity in May is actually this kind of like low to mid 2s to low to mid 3s. That was actually the slowest kind of price range with some of the least activity compared to what we've seen. To give you a frame of reference, just between that kind of $2.6 to $2.75 million price range, there were 5 properties that sold, which is great activity, but those 5 properties took an average of 8 months to sell, much higher than the market average right now, which is kind of more in that month and a half range. So if you look at all of the homes, the luxury market, the affordable market, the condos, everything grouped together, it's taking about a month and a half to sell a property right now, which is up from this time last year, and of course the peak markets of 2021. So just keep that in mind. It's a little bit slower now, and that's really segmented in the properties that are coming on the market where sellers have adjusted to our current market conditions. We've seen that in that the median listing price is actually down 5% this year versus last year. That may sound like bad news, but that's actually good news. That means sellers are becoming more realistic. We had all this great price appreciation in 2020, 2021, and the first part of 2022. Sellers became really optimistic, so they started listing their properties higher, which then actually started slowing the market down because buyers didn't think that the properties were worth that price. So now the sellers are adjusting back down to more realistic expectations, which is great news, and we're starting to see that market activity pick up again constrained by the lack of inventory, which is our biggest one. Like I mentioned, the luxury market is still seeing some great signs. 1045 Cold Springs Road was the big sale, selling just under $16 million, and that closed out in the month month of May. And even on the condo side, there was an almost $6 million condo. It closed at $5.7 million on Via Alicia. If you're unfamiliar with that location, that's on the Eucalyptus Hill neighborhood, kind of right between Santa Barbara and Montecito. And those large condos offer some of the biggest, most panoramic ocean views in our entire area. But that is quite a price tag, and I believe, if I remember right, that was record-breaking for that complex as well. So there's still good activity there in the luxury market. Now, as far as what home prices might do in the coming months, one of the biggest indicators there, based on basic economics of supply and demand, is what we call the absorption rate, or the months of inventory. That's how many weeks or how many months of inventory there are where if no new homes came on the market, at the rate that current homes are selling, the pace that current homes are selling, how many are selling every month, how many weeks or months would there be until there'd be no additional homes to sell. And that's one of the key factors that we've been tracking for years, predicting the strength of the upcoming real estate market. So we have seen both of those inch up a little bit recently. For the regular market, that's in like the 1.8 months of inventory, so that's up from like the mid ones. And then from Montecito and Hope Ranch, that's up to over 4 months of inventory now. That always sits a little bit higher, maybe an extra month of inventory compared to the affordable market. But again, it is ticking up a little bit. So I think a lot of that's just the uncertainty in the market right now. Like everyone's kind of on pause. What's happening with the economy? How much is the Fed going to continue to try to slow down the economy, raising that Fed rate, which ripples out on some of the other places? And then a lot of savvy buyers are thinking like, okay, well, at some point in the next year or two, those interest rates have to come back down. That's just the cyclical nature. And when that does come back down, you're going to see a lot of buyers come back into the market, and that supply and demand, less of the inventory is going up. That should increase. That should put an upward effect on sales prices. So there are some savvy buyers and a good number of investors that are actually trying to get into the market right now, take advantage of the kind of the economic situation, and find great deals now, and then hold long term for whatever next cycle there is coming up. So I hope that helps. Condo market's still very active, and seeing on average condos are still selling above their asking price by a couple percent, which is wonderful. And they're seeing the same thing, less sales activity. I mean, literally, there's like less than half the number of condos that have been available this year compared to last year. So that's pretty incredible there. So overall, we still have an active market. It's the summertime, even though we've got a little bit of the kind of the June gloom happening. That's wrapping up. We're starting to see some nice weather come out. We're starting to see some good views again. So we expect some good ocean view properties to come on the market. And we're expecting to see a fairly measured summer. And that, again, is constrained by the lack of new homes coming on the market. If home sellers change their tune and they start bringing their homes on the market, we're going to see a massive boost up in that real estate market. But we're anticipating just kind of a measured active market where it's still more of a seller's market than a buyer's market, and it's still good activity, but not a ton of sales happening because of that constrained inventory. There you have it. I'll give you an update next month in July, but thanks so much for tuning in. If you would like a private, confidential consultation for us to dig in a little bit more on your specific situation, whether it's the right time to buy or sell now or not, we are always neutral advisors. We'll always put what's in your best interest ahead of our own, and we're happy to kind of weigh in and just kind of help put a strategic plan in place, whether it makes sense to do something now or makes sense to wait. We're always here for you. Have a great rest of your month.